We are in a full bull market, probably very close to the highs of this cycle. Faced with such an event, which only happens once every 4 to 5 years, we all want to make the best moves now. What crypto investments do we choose in this period? Bitcoin, Ethereum, old or new projects? Next up, I'll present to you 10 reasons why investing in new projects can bring you a higher return, but also 3 disadvantages, so you can subsequently make the best decision for you. Opportunity for accelerated growth. New crypto projects have a much smaller market cap at launch, which gives them a much larger margin for growth compared to older ones that have already reached market maturity. For example, a new token with a capitalization of several $1,000,000 can increase its value 10 or even hundreds of times if it becomes popular. In contrast, an old established project with a capitalization of billions will grow at a much slower rate due to the massive capital required for significant growth. Technological innovation. New projects frequently appear with innovative technologies that address existing market problems, such as transaction speed, costs, interoperability between blockchains, or scalability. For example, while Bitcoin and Ethereum still have limitations in terms of transaction speed and cost, many new projects are coming up with more efficient solutions, like Layer 2 networks or fast consensus blockchains. This innovation can attract users and investors, propelling the price up. Improved tokenomics. Tokenomics represent the economic structure of a token, such as how tokens are distributed, inflation, or how users are incentivized. New projects can learn from the mistakes of old ones and adjust their model to be more sustainable. For example, they can introduce token burning mechanisms to reduce the total supply, fair distributions, or staking with attractive rewards, which can attract more investors and increase demand. Lower cost of entry. In the early phase, new projects are priced low, often at a market discovery level. Early investors can buy at extremely low price, which gives them a major advantage compared to established projects, where prices are already high and require a considerable investment for much more limited possible growth. Early adoption. Investors who get into a crypto project early can take advantage of the rapid growth and adoption. For example, a project that brings a practical and attractive solution can be quickly adopted by developers and users, leading to an increase in the value of the token. Those who invested in the early stages directly benefit from this growth, having the tokens at a small price compared to what they are valued at later. Effect of hype and speculation. In the crypto market, many new projects are accompanied by hype generated by enthusiastic communities, influencers, or marketing events. This hype can lead to rapid price increases as more investors try to not miss the opportunity to catch the growth. While hype can be speculative and short-term, a project with a solid foundation can attract long-term investors, building its value. Support from institutional investors. Nowadays, many new projects manage to attract investments from venture capital funds or other institutional investors, who can provide not only capital, but also expertise and resources to accelerate the development of the project. For example, a project backed by a large fund can have access to strategic partnerships, promotion, and integration on major platforms, which leads to a rapid increase in the price of the token. Experienced teams and clear visions. In recent cycles, the teams behind new projects are often made up of people who have experience from previous crypto cycles and large projects. These teams have a better understanding of the market and user needs, managing to launch better optimized products, avoiding the mistakes made by older projects. This can increase investor confidence in the project and bring higher returns. Increased liquidity flow. In a new crypto cycle, there's an influx of fresh capital into the market as investors and traders try to find the next big project. New projects benefit from this liquidity, leading to high volatility and opportunities for rapid growth. As these projects become listed on major exchanges, the increased liquidity can accelerate the token's price growth. Regulatory evolution. As crypto markets become more regulated, new projects can build solutions that comply with the new regulations, giving investors greater security and confidence. A new, well-structured project, from a legal point of view, can attract more institutional and retail investors, thus offering greater growth potential compared to old projects that may not comply with the new regulations or have difficulty adapting to them. But the opportunity for big gains often comes with corresponding risks. There are 3 disadvantages of investing in new crypto projects, as soon as I introduce you to our newest product. We're going to soon launch a course that will guide your investment steps in the crypto world throughout the financial cycle so that you know at any time during the 4 years of the cycle what you have to do, what to buy and what to sell, but especially when and why. Don't worry about the price. We strive to make it one of the cheapest courses on the market. We will let you know when we launch the course, but let's continue with the presentation of the main disadvantages of investing in new projects. Number 1, high risk of failure. Most new projects are early stage and do not have a solid track record to support their viability. Many of them may fail for various reasons, such as a lack of an experienced team, technical issues, stiff competition, or inability to attract adoption. The risk of a project not achieving its goals or disappearing completely is much higher than in the case of established projects. Number 2, lack of liquidity and extreme volatility. New projects may have low liquidity, making it difficult to buy and sell tokens at fair prices. Also, these projects are highly volatile with large price fluctuations in a short period of time. This volatility can bring significant losses if the investor does not manage risks well or if they face difficulties in selling in time. Number 3, regulatory and security risks. New projects may be more vulnerable to regulatory issues, as many may operate in a legal gray area. In addition, new projects are often targets for hackers or fraud, rug pulls, because they do not have time to fully secure their infrastructure and establish trust in the market. This can lead to complete losses for investors in the event of a cyber attack or scam. Thank you for staying until the end, and if at least one piece of information was helpful in this video, please give it a like. It helps us a lot. If you think others should see this video, share it with your friends and don't hesitate to tell us in the comments what other topics you would like us to cover.